Hey traders, checking in on the stock market today. So we're seeing a lot of euphoria out there. Bitcoin all-time highs, S&P 500 all-time highs on the same day, QQQ all-time highs as well. So that doesn't mean stop riding the bull wave, but it absolutely, to me, means check yourself.
Introducing the Chart Guy's Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
So the S&P 500 hit all-time highs today. Certainly not a convincing break. 371.05 was resistance. We only broke it by 11 pennies. We have our line in the sand support of 363.26. If that level does not break, the bulls keep complete control. One thing that stood out today, in the first 10 minutes of trading, all three of our sectors broke their low of the day at the same time. Healthcare, QQQ, and XLF were all at the low of the day at the same time. Why did we not see any bear follow through? So as soon as I see that, red flag shoots off in my brain. Okay, watch for weakness and watch for a number of things. Number one, I was looking for bear volume. And number two, I was looking for each of those sectors to break a key level. So what I did in the first 20 minutes of trading while I was live streaming, I recognized, okay, everybody's at their low of the day right now. I looked at QQQ and I said, okay, we're at the low of the day, but anything over the low of yesterday is just an hourly higher low. So we're looking for an hourly higher low on QQQ, okay? I know the setup, that's where we stand. XLV, what am I watching? We're at the low of the day, first thing in the morning. I'm watching low of yesterday. 111.02, it's in play. It ended up holding. Number three, XLF. Okay, what are we looking at? We're at the low of the day. I'm looking at the hourly higher low from yesterday, 28.54. That level eventually broke, but it held all through the morning. So I get my red flag, watch for the bears, watch for bear volume. I had check mark number one, all three at the low at the same time. And I'm looking for all the other check marks that I just went over. None of them hit. QQQ, just an hourly higher low. XLF did not lose hourly support of 28.54, and XLV did not break the low of yesterday. 0 for 3 for the bears, no bear volume. If the bears were going to prove something to me, I would have needed to see a SPY 5-minute bear flag, lower high and lower low. Instead, we ripped to a new high of the day. Why did we rip to a new high of the day? QQQ had a lot to do with it. V-shaped bounce off of its low. It double topped at the high of the day, then double bottomed at the low of the day, and then took off. But bottom line is, we had one check mark, so I was on red alert, but no follow through whatsoever. No 5-minute downtrends confirmed. Sigh of relief for the bulls, led by the tech sector. So touching back on yesterday's video, what did we say about QQQ? If we're going to see follow through on a new all-time high and another leg up in these markets, we did get an all-time high. We don't have follow through yet, but what do we need to see? We need to see Microsoft and Amazon, again, two major holdings in QQQ, act as the fuel for the next leg up. They've been trading sideways for a month. Microsoft bulls showed up in a big way. We took out 1, 2, 3 resistance levels, highest price we've seen in a month plus, and we're looking up at 228.12 as the next resistance level. Check mark, Microsoft bulls showing up, breaking their sideways range bullish. Definitely more proving to do, but obviously a notable shift with pretty much the most bullish day that we've seen in the last month plus. Amazon, same thing. Big bull day, have to break 32.50 tomorrow. We're right there. Then we need some follow through, but these bulls are showing up. Apple is obviously a major tech name as well. It's holding on just fine. It has been strong over the last couple of weeks. Doesn't really matter what Facebook and Microsoft or Facebook and Netflix are doing, because it's those three names that I care about more than Facebook and Netflix. Facebook and Netflix matter, but those three names matter more. So let's see if we get follow through to give us another leg up in this market. QQQ, 298.09 is our line in the sand level. As long as that holds, the bulls have complete control. So whenever I see euphoria, Bitcoin all-time highs, a lot of USMJ sector names at all-time highs. We've got S&P 500, QQQ. It doesn't mean I'm looking bearish. It doesn't mean I'm fighting momentum. But again, little red flag goes off and says, okay, time to be cautious. If I start feeling it and seeing it on social media, and that just means be cautious, check your stop levels, confirm your game plan where things, if they drastically shift very quickly, you will be able to act and you won't be frozen like a deer in the headlights. So it pretty much just tells me, okay, review your plans, have a plan B. Plan A, ride the uptrends, ride bull momentum, watch for that plan B. And that plan B was fairly close today. But again, 1 check mark for bears, 0 other check marks after that initial 10 minutes. XLV. Multiple inside bars. Technically, we broke the high of yesterday, but only by 6 pennies. So I'm just treating it as multiple inside bars in a row. And our new line in the sand level will be 110.77 if we get a little bit more convincing follow through. So 110.77 is a short-term level, but it will matter more to me if these bulls shift their momentum back up towards resistance. XLF, inside bar bull break. Again, actually, no, it wasn't. An inside bar here as well. We closed strong. And again, the line in the sand will become 28.11 if we get a little bit more bull follow through. So XLF and XLV pretty much sideways 2 days in a row with a bit of a bullish lean. And it's just been QQQ that's doing the majority of the heavy lifting the last 3 days. 3 green days in a row, 3 higher opens in a row. And at that same point in time, we had a big red XLV and XLF day and then 2 days of sideways. Biotech sector, still seeing healthy daily consolidation. Could this be a daily bull flag? Yes, it could. We broke the low of yesterday with a lack of bear follow through at the moment. We're watching for first hourly oversold conditions if the pullback continues, and daily EMA 12 is coming into play in over 140 tomorrow as we scout a daily higher low. Again, I love in this market environment when we see hourly oversold conditions for the first time off an all-time high lining up with daily EMA 12 support. It's a nice high probability trade. SMH. So similar to QQQ, the difference is potential for a lower high here. So high, low, maybe a lower high, and if we pull back with a red day, it's then all about 210.41 support and this tightening range. Look at Amazon on its daily tightening range, and look at NVDA. It's doing the same thing minus the bull move. It's a very nice equilibrium. High and low from the big move here, lower high, higher low, lower high, double bottom, double top, and staying in this tightening range for now. How NVDA breaks this tightening range is going to have some significant implications on SMH in my opinion. So we'll be watching that over the next coming couple of weeks, keeping in mind that next week is only 3 trading days. TAN, solar sector, inside bar, healthy hourly consolidation. We didn't see that hourly consolidation yesterday. It was all bulls. The low of today is our hourly higher low now of 89.49, and bulls trying to make their way back to that recent high of 93.13. If the inside bar were to break bearish, we scout the daily higher low, anything above 79.21. The VIX pulling back, trying for a daily higher low above the base of support down at 20. That's all I got to say about the VIX. Not much to say about the VIX. The dollar is still weak. We had the FOMC today, and we had a bullish reaction in the dollar, which led to a bearish reaction in SPY and a bearish reaction in metals, and then the dollar rolled over. This market is being trained on a daily basis. Any bull move on the dollar, short it. And eventually, that trade becomes too crowded, and you see a short squeeze. So I personally have never really witnessed, off the top of my head, a significant short squeeze. I guess you could call the initial COVID reaction a short squeeze. Definitely. That was a short squeeze. But the market gets trained to always look in one direction, and it's so easy. You just short any pop. Everybody goes on one side of the boat, and then the boat flips into a short squeeze. So again, I'm not saying we're about to see a dollar short squeeze, but you better believe that I am watching for a drastic shift in momentum on the dollar. Doesn't mean we're going to get it, but I'm going to be ready for it if it happens. I'm going to recognize the signals that it's happening. And if it happens above 88.25, that would be our 6-month higher low. And that would be our many-year equilibrium continuing to play out. All about 88.25. And I saw a falling wedge posted in our chat room. I believe it was by The BODs. Forget exactly where he had it, but it was a good one. Maybe it was on the weekly. Either way, it's a crowded trade, and we're watching for a shift. No sign of it yet. Metals, good day today for the bulls. Look at the biggest difference. We've been noting the difference where silver's been gaining strength against gold. The small differences were the lower lows on these little wicks on gold, while silver gave us higher highs. And today was a very big difference. So look at gold, $10 under resistance, 0.5% under resistance, and silver, bull break, big surge, and multiple percent, pretty much 2%, above resistance. Big difference. Significant follow through, conviction, the weekly double bottom, getting a lot of follow through, lots of space for a weekly higher low when we top out. 26 is the next most important resistance level. And silver's looking good. As long as the dollar remains weak, assets are just going up. So gold, if we're going to follow, has to break 1875. And then from there, we would be looking up to 1899. Might as well call it 1900. And again, XAU, XAG shows us the comparison. Who's stronger? Do I want my money in gold or silver? And this breakdown is saying silver. So we have a daily downtrend on this chart. And as long as that's the case, silver's the better place to be than gold. Miners, solid day, close at the high of the day. 36.92 key resistance. If we were to reject from that level, we would then look for a higher low on the daily. And comparing to GDXJ, we don't look at GDXJ very much. But let's just do a quick comparison. And we've got 1.8% from a higher high versus 2.5%. So it's my understanding, I haven't gone and looked at all the holdings and confirmed this, but it's my understanding that the junior miners have more exposure to silver. So if the XAU XAG chart is in a downtrend showing us that silver is stronger than gold, that means that it is likely that GDXJ is going to be stronger than GDX as far as bull miners are concerned. Senior miners versus junior miners, more exposure to silver, and I would assume other metals as well. And other metals are doing well. Copper, platinum, etc. Again, this environment with this weak dollar, just throw a dart. If it's an asset, it's going up. Oil. So I tweaked my 4-hour rising wedge a bit, but we are breaking bullish. And actually on this chart, I have not tweaked it. But again, this is why I don't love uptrend and downtrend lines for entries and exits. I use them as guides. But again, this looks like a perfect resistance line, and it just completely changed where it was. And if I had left it, we would be breaking out, but just a tiny little tweak, and we're still rejecting. So what matters more to me is the price levels. We are breaking resistance. We're still lacking follow through. We can clearly see bulls are tired, but bears are proving nothing. And if we do not break 45.69, our new line in the sand level, then bears will continue to prove nothing. Bulls can be exhausted all they want, but if we don't lose daily higher lows, oil bulls keep complete control. Natural gas still has not topped out yet, sideways today. So again, patient bulls are waiting for a daily higher low. And patiently waiting, looking in the 240s. And we would have to see a break of the pattern of a higher low every day the last 5 days in order for that daily consolidation to look for the higher low to be underway. Short-term resistance is 2637 and a lack of resistance immediately after that. So that is where we stand. Bulls are strong. Euphoria has me cautious. The dollar, I am watching for a short squeeze, and there is zero sign whatsoever of it. I'm not going long the dollar. I'm not going short assets. I am observing so I can be agile, maneuvering my money around quickly, just as I was able to do so to start the year. Again, I didn't make a ton of money on the way down. I didn't make a ton of money on the way up. I did make money in both directions. Just speaking in terms of having a short position at the start of it all, scaling into some long positions into weakness, but I was agile and I was able to maneuver and stay very protective and comfortable for the majority of that move. Agility is a very, very valuable, I don't know what you would call it, an asset, trait. Agility of capital is an essential trait for me to be comfortable in markets. Do good things. Have a good day. See you tomorrow.